All right, good afternoon, KW Prosperity. It's Matt Mary Beth here with Nick Marinowski. Thanks
Hey
for
guys.
being on again, Nick.
No, my pleasure. Thanks for having me, and thanks for taking the time to do all these Zoom meetings. I'm sure you guys are worn out from it,
Absolutely,
but it's important.
it's a lot, and yet we have a lot of good information. So it's been very impactful for the agents who have been plugging in.
Yeah,
And I think we
and
talk
the
about
feeling of
this.
connections thing, like to feel some normalcy of things like
Yeah,
Well, and imagine if you didn't see us every week like this.
Oh
How
my
would you
God,
feel?
I would be depressed. I would just
This
be
is the
absolutely
ultimate
depressed.
customer service. We want to make sure that you, our
I know,
customer,
I know, I know.
no, it really does create some normalcy just so that there's, we're all in each other's lives. And so at least for everybody to hear from you weekly, I think that even if we had gone to like a monthly, it would be almost too long. Think
Yeah.
about what's happening in just days.
No, I appreciate you guys so much for doing all this. I know that it's not easy during this time. I mean, it's, we're handling a crisis and, trying to make the business as usual as possible. And there's always a lot of stuff to talk about when it comes to mortgages, when it comes to, Matt and I were talking about the PPP loan, just some things that are happening. But I was saying that this is the first week that it's starting to feel like you're starting to see some light at the end of the tunnel. Like like what we've done has actually worked, in the country, and new cases are down on average. Like that is really positive and something good that people can be like, all right, man, all this damage and all this stuff, it's been for the greater good, and it's actually working. The scientists and the health experts, they were right. We needed to do this. So it makes swallowing this economic poison pill a little bit more palatable so that we can get back to some normalcy. And that's been really great. Like this is the week that I'm like, oh my God, there's now talks about, reopening at some point. And I think like I said before with our business, it might affect some things for those, buyers that maybe don't come back into the employment market, but I think it's just kind of pushed things off for us rather than, caused the crisis. And at least on this side of things versus 2008-9, there's not a huge debt or housing crisis that led up to this. Like we get to lead from a point of strength, this go around, which is pretty cool.
Now, Nick, have you seen, as you're talking about some of the more, this week's been a little more optimistic in the sense of hopefully, people are getting together to talk about what the reopening progression would look like. Have you had any conversations with clients you've worked with or buyers you've worked with or people reaching out to you more now that there is that kind of sense of hope that, this might be trending in the other direction to give hope to those buyers and your clients?
Yeah, so I think I mentioned this before, and it's starting to feel more correct that we still have, obviously we have a lag time between new pre-approvals and when they're coming to submission. So we still have loan submissions of those buyers that were pre-approved in January and February, and they're gung-ho about it. I mean, we've seen some, especially from your office, like clients coming in, they're doing it, whatever they have to work out with the seller, whether it's closed soon or closed later, they're willing and able because they know that the time is good. Rates have finally seen a steady, kind of a leveling out, like kind of, yeah. So you're between 3.3 and 3.5. And that's really good because the Fed came in, bought a bunch of mortgage-backed security, continues to do that, but they're buying, they kind of check themselves on how much they need to buy to keep things nice and even.
Fluctuating, like I forget who we talked about, whether it was John or Nick, or not Nick, Shane. I'm getting the names all mixed up now. That's how often I'm on Zoom. They were saying the rate sheets in the morning could be very different than they were 2 hours later or later in the afternoon. Are you still seeing that, or has that kind of leveled off?
No, I don't want to speak too soon, but that has leveled off, which has been amazing because we're all in the same boat, and they're right. Like there were some times where rates would fluctuate.
Specifically.
Yeah, they would level off they would change by 0.5% from one day to the next, and it was difficult to even quote anything or get people on a set plan or execution for that. So nowadays it's back to like a little bit more of a steady rate that's like, hey, if we talk about a rate in the last couple of days, we'll probably still have that in the next few days when we're going in to lock it in for you. So that has and that's created some normalcy, because we don't like it. Not only do clients not like it, but it's really bad for mortgage companies when there's so much volatility, because then there's an inherent risk from an operational standpoint, from a secondary market, capital market standpoint from our end. So that, thank God, no news or like flat news is actually what we've been looking for in the mortgage industry. And I think that the clients will also like it too, because then they're, you don't have to price in the volatility from a lender standpoint of, because sometimes what was happening is that rates were changing so much that lenders had to brace for that by pricing in higher, margins on top of that. And so it was like really hurting everybody, but it was kind of something like, hey, if we can level off like we have been, this will be a lot better. And I think that some of the news with the economy and potential talks of reopening, as long as we do it smartly, I think this will just kind of continue on and allow us to do business as usual, whatever, in what that means today. So part of what I think will happen is, even though maybe submissions and things like that for new purchases might slow down a tick, because people might pause, because now we're starting new pre-approvals. And this is the other exciting part, is that the leads and stuff like that we've been getting, people are excited to buy if and when would they ever, whenever they can. So I don't think that the demand from the buyers has slowed down. And if anything, I think that we're getting them more excited about, like, hey, this is the time, like, maybe you can find the right house when somebody else isn't, and we've been, engaging with them in a way that is getting them ready. So I just hope that, the agents are ready once, this flood of people, when they can, leave the house again, is ready to show some houses. So the only other uncertain side is the getting the listings, right? So that's a challenge. People that are thinking about putting it off or whatever. But I think it's just educating. The agents with KW are so good with just educating the sellers in telling them, the buyers are still there. Like, this is the best time as any. You don't want to wait for, a potential price reduction. If you need to move, you move now. Let's sell this thing, now. And because there's flexibility both from a mortgage side and appraisals and all that stuff, and your virtual buyer workflow, that they could still get maximum value from their homes and keep this thing going.
So there are a few things that you said, the fluctuation in the rates that you were experiencing over the last couple of weeks. I can imagine that, and this would be advice to agents, I guess. I can imagine that a buyer would be quicker to drop their loan officer for a better rate that they get wooed by than they would to leave a realtor, because they look at the realtor as the price that this is costing me is already established, or I'm working with them as a buyer's agent, it's not costing me anything. And then they get in the hands of Nick, and they have a great connection, and you've given them a rate, and then half hour, 3 hours later, the rates spike or lower, and then somebody else is wooing that carrot. And so you don't
and it's
have
not
that,
apples to apples. Yeah, and it's not an
so
apples to apples comparison.
and you might say, no, you're right, yes, the rate's just lowered and I'm going to be able to get you a better rate, but you didn't even give me the opportunity to even make the call, because maybe somebody. And so I guess my point to this is that we want to protect your business as well. So our agents that are out there, talk to your buyers about how, if there's any concern, or if they have any questions, or if they think for whatever reason the rate should be lower or higher, or somebody told them at the dinner table, I would just advise them to just go and have an honest conversation. If you know, if that's the case and Nick says, yep, the rates had dropped and I could put you at something lower, he'll do it. If that's not the case and it's not the product and it's not a apples to apples, you can have the opportunity to explain it. So I just don't want you to lose business when buyers are going to be looking at that pinch that they're in right now and going, yeah, but I was able to save $80 a month over here.
Yeah.
And that $80 is $1,000 for the year, and that's their one vacation they could take their family on. So
yeah,
I just want us to be mindful of that when on our agent end, how we can control the loyalty that they should have with their loan officer.
Yeah, no, I would say thank you for bringing that up, because I think it's important in this time when you're referring to a loan officer as a realtor. Don't necessarily zoom in on the interest rate right away, because it's hard enough it was hard enough even from our end to say what it was at any given time. I would focus on the process, relationship, like they'll get it done. They've been working from home. They're completely remote, digital. Focus on some of the things that you know for sure are not contingent on the daily rate fluctuations. And if they're an agent and the buyer comes to them with questions about the interest rate, tell them to have a conversation with the loan officer and give them a chance to explain or to see what, you know, because interest rates change daily, sometimes more than once a day, to have them discuss what the potential differences are and what we can do. Get-A-Rate is a mortgage banker, so we fund and close on all and do all our loans, but we also, as a mortgage banker, that's not just one single bank. We have 20 different investors that we sell, you know, loans to, and they all give us different pricing. So we can internally basically shop this around and provide the clients with the best available rate at that time if we're matching them up, you know, on the same day or in the same, you know, kind of breath. And that's what makes it difficult. It's like, hey, rates have been fluctuating, but, you know, Nick and Get-A-Rate are always there to give you the absolute best possible deal at any given time. And so discuss that with them, and just make sure that you're also focusing on, you know, banks today and mortgage companies are all over the place when it comes to, you know, processing time. Some of the big banks are inundated, you know, 90 days turnaround. You know, there's a lot of differences that we can discuss. That's a lot more important than maybe a few bucks in the interest rate. And even so, we can fix the, you know, the interest rate most likely and give them the best available at the time of when they're locking in the rate. And the difficult thing too is, like, we have to have, what we do is we have honest conversations about if and when we are ready to lock. So loans that are closing in July, they're not ready to be, you know, locked at this point. So, you know, this is something that we do, that we're mindful of, that we discuss, so that, hey, like when it comes time to lock, when we're within 60 days or so, that's really the time where it's not only cheaper to lock when you're shorter from the closing, but also, you know, a good time when maybe this is all a little bit settled in and you'll see some better rates anyway, you know. So those are some of the things that we need to discuss, especially when we're trying to get around, you know, appraisals and execution and the process, so that, you know, we can meet all of the closing dates that everybody's looking for. But thank you for that. I would just say that agents should be mindful, you know, not to speak on behalf of the loan officer for the exact rate, but to just say, like, this is someone that I trust will get done with the process. And if your questions about rate, always talk to them about, you know, what's going on in the market and how to get the best rate possible.
How it's affecting them specifically, not generally what's going on with the market. Second thing that I wrote down here is you're talking about the buyers have some urgency, but maybe the sellers are holding back. And so yesterday we had a guest on one of my Zoom calls, and she said, one of her agents asked, what's the script that she's using? Tell her agents get those listings now.
Yep.
And she's honestly just saying, you know what, Mr. Seller, it's a really great time to get that paperwork done right now. So that when this does open up, we are the first there, so we get you top dollar. So why don't we go ahead and get that paperwork done now, right? And then we're gonna put you on our exclusive list. And who knows, we might just have a buyer that's in the market that we can match make, knowing that you don't want to put your house on the market right now. And so we are seeing listings being taken. I think we need to maybe use
Good.
that script a little more with sellers so they get into the act of signing and putting all that, because there's like a nervousness in the signature on a listing paperwork process. Get them comfortable with that so that we do have more inventory to go ahead and sell. So
Yeah. No, we
yeah.
say the same thing. It's the same exact thing, same script for us, because people are like, oh, I wanna wait to lock in a rate. But if we don't start the process and get a signature on an application to get started, it's just an application. Like we can,
Right.
I need to be ready to push the button with you on a lock, and I can't do that if I don't have, a signed application and your intent that you're applying, intent to proceed, we call it, to apply for a loan, and then actually be ready the minute that you're ready to lock. Because a lot of
Yeah.
times there's that lag time between communication, and then you're like, well, we can't execute according to your plan, and this is how we work around it. We get things started, and then when you're ready, I'll call you when I have my finger on the button so that we could, lock it in if that's the time, based on our thing. You have to trust the professionalism in
Yeah.
the process.
So you're creating the buyer power right now.
So
You're giving them some buying power. So when they find that house, it is just, yep, pull the trigger rather than scramble last minute and then potentially not get the house because there's a few other people that are waiting for that house to come on also. I do think that this might actually generate an increase in home values in certain markets in our area, because there will be such a bottleneck of buyers like wanting to get their house.
Yeah, no, I do think that that's going to
And
happen in the interim, because the pause on the sellers might be more than the pause on the buyers. So it'll actually increase demand, which I don't know. I mean, how helpful that is, but certainly, will help get, the listings, through inventory down. And then as soon as the next person wants to list their home, you're going to be like, you're the only house on the on the market.
Well, yeah, no, and so that will create this
Correct.
up, and then everybody will say, "Oh, it's time to sell because look at all the equity we have now." And then they'll flood the market, and then we'll have a buyer's market again. So I want agents to really understand that this is a natural cycle of less homes on the market, more home, all these things that happen that the gates either open or close dictate. Are we going buyer? Are we going seller? Where the rate's going to be? Where the price is going to be? These are all indicators of our market. And if you're a professional, you should be monitoring all of those numbers.
Yeah.
Nick, one thing I was going to ask you is, I know we have about 5 minutes left. What do our agents need to know today? So as things, they're changing, seemingly daily. So today, if you were speaking to our agents, what should they know, or what should they be aware of? What do they need to know today in terms of whether it's interacting with their clients or interacting with you, the lender? What should they know today?
I think it's important to, as we discussed earlier, to refer the lender on relationship and process, and to have open communication on differences in closing dates, commitment dates, what the potential issues arise, like if they know that the appraisal can't go through or is not acceptable, we'll do a drive-by or a desktop appraisal on the home purchase, to be aware that some buyers or sellers maybe aren't as gung-ho in certain instances, to know them better, because some people, what I've seen is that some people are 100 miles an hour or even more excited, and then some people a little bit more hesitant or frozen or delayed in their responsive, is just to know and empathize with everybody involved, to empathize with your lender, to empathize with your sellers and buyers, and just to set the expectation of like, hey, we're going to get through this together, and we have a process and trusted team to make this work. To know that we have seen some more stability in the mortgage market, so that'll hopefully pan out a little bit. To know that there is some light at the end of the tunnel here on reopening. And then, like anything else, like whether this was 2009 and it was a housing crisis, there's still people making money. It's just harder. So it's like, okay, are you going to sit back on a couch and just wait for this to end and then start doing your business, or are you going to build your business, or or get whatever you can. It might take more phone calls. It might take more, more effort, more engagement, more building. But to keep that in mind and just say like, look, it might be harder to get one more deal right now, but let's, I have to keep working because what's the alternative?
Absolutely.
How about on the appraisals? How do you suggest they combat the appraisals? If we know that the appraiser is not going to be going in the home and they're going to be doing a drive-by appraisal, what's the best way to get the information, or what information should we be giving to them so that they can get as close to accurate as possible?
I mean,
because we do recognize that there are some out of area appraisers still working, which is definitely skewing the values.
yeah.
And we are seeing, we're seeing less than, we saw 40 and 50,000 short appraisal. So
the one we haven't, I thought about how that might impact. I haven't seen it necessarily internally as much just yet. We will try to get a full appraisal because that's still the best way, especially if the house has like, updates or things that maybe aren't, that it makes more sense the more information that you have on it, right? There are some limitations to an exterior only or, and then a desktop appraisal, which is, almost like, it's just like a remote appraisal. There might be certain instances where a house has some special information. If it's a standard vanilla house in a vanilla neighborhood and all the comps are the same, then you probably won't have that issue. But if your house has upgraded items, then that could be a potential issue. I would say to provide that information, whether it's in comps, to the lender. One of the things that we've been doing is prior to, if we can't get a full appraisal, we'll pull our own AVM, an automated valuation model, just to see what the comps look like, just to see if that's in the ballpark, and then also a property profile report to make sure to see what the information is, previous more, all of the last time that house changed hands, just to see how that feels compared to the home value, whether it's a refinance or a purchase or the purchase price, right? So that's kind of what we've been doing going into this to kind of prevent those issues. And if we see that there's a big disconnect between what, the systems feel like the comps are and what the listing really is, then we'll say, hey, Mary Beth, the AVM is coming in a little short. Do you have any comps or ideas about how you can, support this value? So when we get an exterior, like an actual appraiser to do an exterior only, that we can make sure that he's looking at this house from the right viewpoint, right?
So they should be talking to the loan officer on the file, whether they may not have been able to control it. And if they're the listing agent, they probably weren't able to control who they're working with as the lender. And they should be talking with the lender on this property to see if they need any help, making sure that the AVM is coming in where it needs to come in. So this goes to our conversation today on bulletproofing the transaction and assuring our agents are doing a little.
That's really good. Bulletproofing the transaction. That's really good.
It's tactic 12. I didn't make it up. It's in the book.
No, but it's going. No, and that's going back to the like, hey, don't the rates are important, but these are the things that like make sure the deal doesn't fall apart, because you have a 1% interest rate. If these things aren't discussed or it's not like part of this team transaction, it's not going to matter. It's not going to matter. None of that's going to matter.
So yeah, so I just want I want everybody to hear us on that is great communication with everybody in the transaction, especially the loan officer on the file.
Yeah. So, I mean, and that's just like, hey, if you listed this property because it's got something, special, like a view or something, that maybe some of the comps didn't, and so it actually needed to be valued or sold for a little bit higher, that's a good conversation to have.
Yeah, you know why it's selling higher. You should be prefacing that, hey, here's the stuff, just want to let you know, reminder, beautiful view from the back. It definitely was the reason why it sold. We
Nick,
had a
just
lot of
wanted
people
to
come
send
through.
these-
They love that view.
Nick, just wanted to send these comps. This is why we.
Yeah, I had nothing to
I
do.
know
I figured I'd send you the comps.
Whether you're the listing agent or the buyer's agent, I mean, buyer's agents, when they make offers on behalf of the clients, they know. The best agents have already done their homework on their side too. If they're not on the listing side, but they're on the buy side, they've done their homework to say, Mr. Buyer, here's the comps. Like, I do feel like this is a fair value for the house, or what you're buying it for is. That is definitely something that, you know, that could go. But knock on wood, like, so far it hasn't been, you know, a big issue for us, you know, as of yet.
And you have a great agent, and I hear this all the time with agents in our office, Pat Lowe specifically, or Teresa, Sean. We're gonna have an appraisal. We might have an appraisal issue with this one, right? That, to me, I love. It's like sweetness to my ear. Like, that's a professional agent. Like, they know the market so well that they know this is market value where they put it together. But they also know that through the eyes of the appraiser and the mortgage, we might have an appraisal issue on this, which means I'm going to get my game on, and I'm going to make sure I, you know, give them all the information they need that they might not see if they were looking through the eyes of an appraiser or a loan officer that isn't right here in the guts of this market. So really good stuff, Nick. Good stuff.
Yeah.
Thank you, guys.
Thank you so much for being on with us.
No, I appreciate it. Again, thanks for taking the time to do this kind of stuff. This feels like a much better week and a better time, and anybody that has questions out there should always you know, reach out to us. And
I have a question.
Yeah.
So for next week, for Winning Wednesday, could we do some like trivia questions or something? Like mortgage trivia questions.
Yeah, I like that.
Do something fun.
So yeah, like what do you want me to?
Wednesday.
You want me to do trivia questions and do like a giveaway, like ask some questions?
Yeah. We'll talk. Let's have some fun.
Yeah.
Okay, sounds good.
We'll do a little promotion to get everybody on, and we'll go Facebook Live.
That's a great.
All right, cool. Sounds good.
Okay.
Thank you. Be well, guys.
All right, bye.
Bye.
Bye.